Every IPO creates buzz. Some deliver big gains, while others disappoint. But what if you could get a better idea of how an IPO might perform even before it lists? In this video, we'll explore 5 key factors that can help you evaluate an IPO and make more informed decisions. Let's start with the big picture. An IPO success is usually shaped by a mix of 5 important things: how strong the company's financials are, how well the industry is growing, what the market sentiment is like, who's leading the company, and how the IPO is priced. Let's break these down one by one. First, the company's financial performance. Is it consistently growing its revenue? Has it started making profits, or is it still burning cash? What are its debt levels? Are they manageable or worrying? And finally, how efficient is the business? Are profit margins healthy? These numbers offer insight into the company's stability and growth potential. Even a strong company can struggle if it's in a declining industry. That's why it's important to look at the broader sector. Is the industry expected to grow in the coming years? Is it supported by government policies or market trends? Also, does the company have a business model that stands out in that industry? These clues tell you whether it has room to scale. Next, gauge the market's excitement. High subscription levels, especially from institutional investors, usually indicate strong confidence. The gray market premium, while unofficial, reflects how much people expect the stock to list above its issue price. Also, check who's subscribing. Is it retail heavy, or are big players involved too? This can hint at the IPO's credibility. A company is only as good as the people running it. Look at the management's background. Have they built successful businesses before? Do they have experience in this industry? Also, check their corporate governance practices. Transparency, ethical conduct, and accountability matter, especially for long-term investors. Now comes one of the most crucial and often overlooked factors: valuation. Is the IPO reasonably priced, or are expectations too high? Use ratios like price to earnings or price to sales, depending on whether the company is profitable. Then compare these with similar listed companies. An overvalued IPO can struggle after listing, even if the company is solid. India's IPO space is buzzing. In the past few years, we've seen major listings, some successful, others not. New age companies from sectors like tech, fintech, and clean energy are catching investor interest. But remember, hype doesn't always equal performance. A deeper look using the 5 factors we discussed is key to avoiding costly mistakes. There's no crystal ball to predict IPO success, but using these 5 checkpoints, financials, industry trends, market mood, leadership quality, and pricing, gives you a solid base to assess the potential. And don't forget the DRHP, the Draft Red Herring Prospectus. It's long, but it contains everything you need to know before you apply. If you found this useful, hit like, share it with your friends, and subscribe to stay updated. And tell us in the comments, which upcoming IPO are you keeping an eye on? We'd love to know. For current and upcoming IPOs, check our website stockhoney.in. Happy IPO investing!